The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 10th. Wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Now it's just fine, 877-927-6648. Of course, you can send me an email, steve@tfnn.com, inside the Tiger's Den. Any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading off 17 points at 20,959. I like that 959. S&P is up 2 points. NDX 100 slightly positive. Russell's up 7 points. The semiconductors up 2%, $22 the upside. You really think that the bear markets form with the semiconductors up like that? I don't think so. Really? And with the Russell 2000 up? Do you think this is the beginning of a bear market? Be careful out there is all I can say. NASDAQ composite up 5 points. You got the VIX down 7 cents, 9.89. It's going to stay low for a while to come yet. Gold is off up $3 here, but the yen is trying to stage a bit of a comeback. So if you're long the miners, you're long metals out here, it's not looking that great. And we'll go take a look at why. Light sweet crude is up $1.72, 47.60. Now, in theory, that should be good for the S&P 500. So the next leg, and I do mean leg, to the upside should be underway soon out here. Leading the charge here to the upside, you've got Coherent Inc., COHR, that's up $32 or 15%. NVIDIA Corp, strong day, 32 million shares, up nearly $17. Electronic Arts EA up 14%. INC Resch Holdings, not sure what that is, but it's on fire. It's up 21%. To the downside, Priceline 5% or 93 buckaroonies. AutoZone down $9. Allergan off 8. Yelp down 20% off 660. Are you a user of Yelp? I haven't found their information, quite frankly, to be that good out there. In fact, when I hit a button and the Yelp comes up, I just basically close it out. It is basically, from my standpoint, no good. All right, so what do we want to take a look at? I know I want to take a look at what you want to look at, but until I get those emails, until I get those pings, looks like the question here. Oops, that just came in a den and vanished quickly. I got to enlarge my screen here. So there's a question says. Question for Stevie, is it today the day where we break through 2,400? 2,400 referring to the S&P 500 out here. Let's just take a step back and take a ride on the reading. So it's a great question. And I think maybe to answer it, what I'd prefer to do, if we can, Maria, is maybe just the bigger picture, right? Let me just get the bigger picture. If I can get the bigger picture correct out here, then we can try to answer that question perhaps. Now, 2,400, might be a magic round number, kind of high out here. But the bigger picture with regard to the S&P 500 specifically is really taking a look at their horizontal trading range boundary lines. And by the way, I've got to say, Maria, nice setup there. How'd you know I wanted to take a look? Yeah, things happen for us, right? not to us out here. And so it must have just been that mental telepathy. Now, these green horizontal lines that are on the screen out here, these are what are referred to as horizontal trading ranges. Slightly different than what our man Bud Rawls had taught to each of us about primary trading ranges. And the difference there is he was doing it all by eyesight, and he was carrying forward monthlies into weeklies into dailies and so on and so forth. I don't do that. The reason is, in order to automatically program this stuff, it's got to go back and take a look at each bar's open and close out there and do its own calculation. And that, in essence, has what it's done. Those solid, can't be solid, those green dashed lines out there at the price point of $11.24 and $13.35, those are the price levels over this 20-some-odd year period that I've got in here. I guess I go back to 1996, so that would be 20 years. Yep, let's get it correct out here. So over the last 20 years worth of data, that is where the largest number of co-located opens and closes are on a weekly basis. You might even say to me, hey, Steve-O, how many are there? Well, that's a good question. I can actually turn that little feature on. We'll take a look at our horizontal trading range strength numbers out there. And back at those price levels, it was 45. So we saw 45 on a weekly basis, opens and closes at the 11.24 area, 33 at the 13.35 area. Now, the beauty about that is once you have those initial horizontal levels, you then just take that distance and add it to the next level as you build this house out here. So if we take a look at the house that's being built by the horizontal trading range boundaries, and we go ahead and we explode it up just a little bit, it really wasn't 2,400, Maria. That was the number that was key to break and bust through. The real number is 2387.79 if we're going to try to be exact. And we're not exact out here. But it's the 2387 level, not the 2400. That is the really important point. So to answer your question, the S&P 500 has already broken out. It has broken above 2387. Now, I'm looking at weekly numbers out here. We're looking at a weekly time frame chart, and we can see that it was last week where there was a close above the 2387 level. Notice how, and remember, these were established, these horizontal trading ranges, they were established based on pricing at 1335 and 1124. This is no willy-nilly kind of stuff out here. And we can take a look at daily numbers on this and monthly numbers and so forth. But really, the weekly numbers, as I pull this back and you take a look at it, they really provide excellent, and I do mean excellent, levels of support and resistance. Now, you and I both know that support or resistance can fail. At this stage here, what we have to assume, well, you can assume anything you want. What I'm going to assume is that resistance has been busted through, and it was busted through last week. Now, if it fails, then it says, okay, you can run back to the prior swing point or lower than that. But at this stage here, what the message from a weekly basis of the S&P until price closes below 2387 is that the next run takes us to 2598. Now, it doesn't do it overnight, for goodness sakes, but the level of resistance, which is really important, was really the key for the S&P 500 to get over. And I hope that answers your question, at least as far as Stevie-san is concerned. Right now, we got the Dow up 29 points, S&P is up a point, NDX back 1. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 28, S&P is up a point. As long as we were taking a look at those horizontal trading range levels, let's go take a look at the NDX. Let's take a look at the NASDAQ. Let's look at the NDX 100 right now just to get a feel for where we're at. Now, we're really at an important level area and inflection point. This here is the monthly chart for the NDX 100, and in this case, you'll see red horizontal lines. You'll also see the midpoints out here. That's the little dashed lines out there. 56.73 being one of those midpoints. We're trading at 56.77. So if you're wondering why has the NDX 100 stalled, well, it's hit a midpoint. Now, at these midpoint levels, they can, not always, but they can act as a area that can turn back price. They can act as a resistance level. I haven't seen a sign that that is the case right now, but I can assure you I'm watching this area like a hawk. Why? Because still along the NDX 100 out here. And I really don't want to get rid of that position unless we absolutely have to out here. Of course, we don't have to do anything, but really there's no certainty. Actually, there is certainty in trading and investing. Once you use stops, exits on both sides of the trade, then you have certainty. Even if they get jumped, as long as you've got a market order, you're out. Your decision is coming back and analyzing the chart again to try to figure out, okay, what do you do now? So you can have certainty in trading and investing, and that's a beautiful thing. Now, at this stage here, you can see in the NDX 100, 56.7, if the NDX can get above this level, not by a point or two, truly clear it, then what we're looking at is the 6,000 area. 6,048 to be exact out there, but we're not going to worry about being exact. But these are important levels. Now, what we can say about the NDX 100 is it broke out several months ago. Remember, it's a monthly chart that you and I are taking a look at. So its breakout occurred right here, breakdancing back in March. So it's broken above a key level. That's the NDX 100. Now, in the case of the NASDAQ Composite out here, slightly different makeup, well, substantially different makeup. Let me switch over to it. Oh, that was the NASDAQ. What the Sam heck was I thinking? That is the, oh no, this is the NASDAQ. Hello, wake up, Steve-O. Yeah, I'm just getting my eyes back. Now, in the case of the larger indice out here, well, we can see that it's also above, or it's at resistance. The number is 61.48. The actual high so far, what is the high out here this month? Let me turn on my little data window. So the high is 61.33 versus 61.48. So that's close enough for our game out here. Let's hide that. But we're watching. I'm watching. You're watching. Those of us who take a look at these horizontal trading ranges, we're watching this 61.49 area because you get above it. Get above it, folks. Then we're starting to look at 7,000, 69.54. Now, 65.51 would be the next level. That's the midpoint. But we'd really, once you get above one significant horizontal level, those being the solid lines out here, they should become pretty good support. And it really opens you up to go to the next level, like who is it? The Eagles take it to the next level out there, or whoever it is. Now, in the case of the NQ, so here's what we know. We know that the NASDAQ composite up against some resistance. We know that the NDX 100 maybe, because it's in that midpoint range out there. The S&P above resistance. So we're looking for the S&P to go ahead and begin to get its muscles going. Maybe light sweet crude will assist in that arena. And if I take a look at the futures market, the NQ, well, it has broken through. This is a weekly chart again that we're looking at here in the NQ. It's broken above resistance. It did it last week. We're above it still, 56.12. This says that where it wants to head to is 59.24, another 300 points to the north out there. Can I chart GBTC, Bitcoin Investment Trust, on the pink sheets? I don't know. Danny, I'll tell you what, when we go to the break, I'll try to see if I can pull that up for you, and then we'll take a look at it. So hopefully that helps out there. Interesting. While out in Vegas last week, I cannot tell you the number of times that Bitcoin came up, just random. Whether it was the Uber drivers or what have you. So, but we'll see if we can take a look at that. Okay, so that gives us the larger, longer-term picture view out here. Now, I mentioned light sweet crude, and let's go see what it is doing, and we can project where light sweet crude is at least headed to, whether it's now back above in bullish mode as it does its consolidation. Well, let me first get over here and take a look at. Let's take a look at this. So here's the current light sweet crude contract. And what it did today specifically at between 8 and 9 o'clock, this is a 60-minute chart. It's the left-hand panel that you are looking at. You can see how the bar turned green out there, turned green. And that don't mean because it had some bad food out here. Turned green in a bullish way because it was able to close above a resistance zone, that being 46.39, the 60-minute top of its box out there. Now, at the same time out here, the 4-hour chart, this is the one in panel number 2, really panel number 3 from the left if you're counting all of the symbol data out here. You can see that it was primarily green as well. So you had 2 intraday time frames that said we're going to go to the next level. Now, interestingly enough, and that is that yesterday, I should say, is that we had a brand new box form, a brand new daily box. Now, what this suggests to you and I, you're trading at 47.65. 48.56 should be a given. There's really no reason that light sweet crude should not get to 48.56 or slightly above that. 49.76. That is where the metal, well, what do they call it? You know what I mean when I say the metal. The tires hit the road. Something along those lines out there. Just don't hit me. But 49.76. You get above 49.76, then you're looking at 52, then you're looking at 54, then you're looking at 55. The rubber. Thank you out there, Danny. But I think that the way light sweet crude is trading as we speak right now, no reason that it's not going to get to 48.56, 49. Now, the reason why we're taking a look at this, or we should be taking a look at this, is because there is still that little bit of a directional correlation out here between certainly light sweet case, certainly between the energy sector, XLE out here, which has been a bit on fire, and it's going to tackle the top of a resistance zone, top of its daily box here soon if it has not already. And so the S&P is going to, I think, have a struggle trying to move lower out there, at least today, tomorrow, Monday, Tuesday, Wednesday, Thursday. We'll talk about Friday, next Friday. But at this stage here, this is a nice setup in light sweet crude. Different setup, I think, in the case of Goldilocks. In fact, first we'll start off by taking a look at the Japanese yen. I haven't looked at it for a while, but let's go take a look at it. When I say a while, see, this is bad news bears out here. It's good news for the bears in gold. It's bad news for the bulls in gold out here because you saw a bounce overnight. You can call it the Comey bounce, the bounce because of a threat of nuclear weapons in North Korea, whatever it is you want to call it. What's really going on was the currency pair, one that you and I track, Japanese. And now, if you look at the 60-minute chart out here, as I pointed out to subscribers this morning so that they knew what was going on, was that the bounce in gold was pretty much over. It was muted. Why? Because we saw the yen testing and rejecting support. We know that the box here was a bullish structure, right? Bullish structure because that point of control close to the bottom of the box. Now in the 60 minutes, it's cleared. It cleared its resistance level. So you headed to 114.33. Let's get above that. Smooth sailing to the upside. That is not good for bonds. That is not good for gold. It is not good for silver. I know that it's good for the miners.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So on my screen right now, we've got the chart for Bitcoin. GBTC is the ticker symbol. It happens to be the weekly chart that is on my screen out here. I've got another screen off to the side. I'm just trying to remove a couple of studies that just kind of muck it up just a bit out here. See if I can do this quickly. Where is it? Right there. Remove that. That should clean things up just a tad. Let's remove those other ones too. Give me just uno momento, por favor. Get rid of those two out there. That one, and I guess got to do them one at a time. Okay, that would make sense. Look at that. Okay, and the question is, can we find a place to go long or short out here? And so let me go switch this back to the daily. Let me at least give you some information out here, Danny, at least the information that I can. First, with regard to profile levels, what we can see is that on the trading session of April 27th, price was able to close above both the daily and the weekly box out here. And there is no other... well, I could switch over here. Let me try this for you, just for the heck. So what we can see about daily and weekly, there's no signal here, box-wise, that tells us where there's any kind of resistance. Because your question was, is there a place to short Bitcoin out there? And so you'd want to try to find some type of resistance level or some type of pattern out here. And, this is certainly a good one, or a way to be able to see. If you take a look at back here on the trading day, by January 4th, price ran right into resistance, the weekly profile. Gap down the very next day. I told us that it wanted to move back out here. There's a brand new profile that formed shortly thereafter, weekly, and price was never able to break through the bottom of the weekly box out there. So it's a good enough signal to at least let you know where you are at in the trade. We don't have anything out here. If I switch over and I just go ahead and type it in here, that was GBTC. Now we're going to get some intraday time periods for you just to see if there's anything out there. And the only thing that we can see here is during the last hour, the last 60 minutes, there is a brand new profile that formed, and price is now closed below the low of that level, which is 237.75. So what you've got here, though, is price, you can see, has moved down into a gap. And I would say you need to at least see price get below that gap, because that's really a support. That's really a breakout area out here. What Bitcoin, like any other chart, my systems for identifying tops and bottoms, just like we did when we looked at the patterns that were in place at all of the bear markets out there. And that's a free workshop that is sitting on your members page. If you're just simply a member of TFNN.com, it's already out there. You can watch a 30-minute workshop. It takes you really probably about 20 minutes to really watch it out there. When the bottom was formed out here, little price relative strength divergent pattern, the most recent bottom back in August of 2016, that was confirmed, and that showed you a bottom that had formed out there. We're going to learn about that a week from today, May 17th, from 5:30 to 6:30 at the workshop that I'm hosting for all subscribers. And it's as simple as you can possibly get to become a subscriber, which gains you access to 30 days of my newsletter service, another workshop on money management, just a whole sundry of items out there. So I expect to see you there. There would be no reason for you not to attend this workshop. But we don't have a similar top here that has formed. So the question is there a place to go short? I don't see it here just yet. Intraday, yeah, but support on the 240. If it did close that gap, you'd be looking at around the $169 area as far as where price could fall to out there. So hopefully that helps you out. If I come here and just take a look at wave counts or what have you, right? Let's take a look at this, see what we've got from here. Let's go count up from this swing point. So maybe you are in level 5, right? You're in the fifth area out here, but price well above support. If that wasn't it, from a swing standpoint, let's take it from down here, this little B area. Let's see what kind of wave count you get. Yeah. So no matter what, you are in the fifth wave, or it looks like one of Basil's instant restarts out there. So I just don't see it as a great trade setup for you out there, Danny. So just be careful in trading Bitcoin. Hopefully that assists you with what the stock chart looks like. Okay, so we talked about the indices out here. The Dow struggling. The real key level here to watch for, I mentioned that we may have the beginning of the next leg to the upside. Yeah, exactly. You know, I don't really care what any of the bears are saying out there. I don't care what anybody is communicating about the low volatility index. Not until I see, or you see for the most part, see a rising bottoms pattern in the spot volatility index with the S&P moving higher, do you need to be concerned? Instead, what we have out here is we have, let me just blow it up on our screen, we have a descending bottoms line. Let's make it red, right? Let's make it red, a red line out here. This is the pattern inside of the VIX. Here's what I can assure you, is that is not a signature of a top inside any S&P market out there. Not that it can't decline, but that is not the pattern out here. Instead, what you need to see is you need to see this rising bottoms with price moving higher inside of the S&P 500. This is a formula for success, not a formula for failure out there. Don't get caught up into the number of what the spot volatility index is. Now, if we get that spot volatility index, that ends up being about 80% difference between the furthest out futures contract, which right now is December, which is priced at 16, then we have something to talk about. But that's only a 60% difference that we've got right now. So it is not even close, and definitely no cigar out there. Doesn't mean we can't see some kind of pullback. But what I can share with you is all of these pullbacks inside of the S&P, or if we just take a look at the ES Mini, all it did today was test support. All it did was test Stevie's red line, that oscillator on change line. That's something else I'm going to teach you about inside the workshop a week from today. So everything is roses as far as the market. When it turns from roses to thorns, I'm going to tell you. But right now, the narration of the market is saying, I don't think so. It still wants to move higher. Okay, so that takes care of the volatility index. We've looked at the currency, the Japanese yen, the one that is most important for you, for those of you that are trading gold and the metals out there. And look, the mining equities, I mentioned the mining equities, but they can have a mind of their own. You know, they don't necessarily have to totally pay attention to what gold is doing out there. And I did mention, it's not good news with regard to what the yen is doing. The beauty here with regard to, here's what I like, here's what I don't like. Where is it? Okay, I guess I can do it here on this chart. No, I don't want to do it on that chart. I get rid of most things out there. But here, I can do it. Can I do it on this chart? No, I got rid of pretty much everything there. Well, here, this kind of explains it, though. Here's the GDX. And watch today's close. You know, what is the close? 2183 is the number as we speak at 138. It could change slightly by a few pennies out here. But see, today was looking fairly bullish with regard to the mining equities. I was ready to come on the show and say, you know something, this bounce, we could see much more of a bounce. Even could be a bottom with price now getting above Stevie's red line out here. But I suspect at the end of the day, it closes below the red line. It was just simply a test of resistance and what we call a absolute failure out there. Now, there is some support, which hasn't been tested, 2071. That's still our call as to where the mining equities, or the GDX, is headed. Great.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So let's see. What do we want to take a look at next out here? What do we want to take a look at next out here? I mentioned the XLE, so it's up 99 cents. Let's go take a quick peek at it. Yeah, it's already tested a significant. So here's where we're going to find out where the rubber meets the road, whether or not there really is a breakout going on inside of Light Sweet Crude. In fact, let me just turn off the weekly profiles out here, and you'll kind of get the gist of what Stevie is looking at out here. And it was on Thursday. Late evening. Well, it was really early morning my time by the time I got back to the room and was working on the newsletter and was saying, you know what, it looks like the energy sector here has turned, but I really needed to be in front of my screens. It was hard to make a call at 9 o'clock at night, which was midnight or so, for something that was going to go on at 9 o'clock in the morning, something along those lines. But at this stage here, the level that we anticipated that the XLE would get to, that has taken place. And that's the top of its brand new daily buck, 68.38. And if the trend has changed out here, what you will see is you'll see price start closing above the top of the box, and you will not see the low of any of these daily boxes get taken out. And that's pretty much what you saw out here up at the highs back in December 2016. And it doesn't have to be today's session. You can see how that level of 68.38 has been tested. We've gotten up to 68.44. I don't really care about the volume. Not that I don't care about it, but if it just simply closes above it and we start to see a change in a change in this pattern out here, it's just going to tell us that now what we're looking at is you could run all the way back up to the highs inside the XLE. That's in the 78 range. You could run into certainly just normal retracements, which, by the way, those would be anywhere from the 0.382 is up at the 70 area, 618.73, 75 for the 0.786. That would be an area. Of course, what you'd want to do is go ahead and turn on those weekly profiles to get the gauge of the next area. The next area would be 70.36. So if you are in the XLE, watch 68.31. If you close above that, you should anticipate 70.36. You get above 70.36, then what I can guarantee, and not that I can guarantee it, but I would say I guarantee that we've seen a change in trend inside of the energy sector, probably light sweet crude as well. So that's looking pretty well. In fact, you and I haven't really looked at the sectors for the most part inside of the S&P 500. So why don't we do that? Why don't we take a ride and take a look at that? Let me change my workspaces a bit, because we may simultaneously look at a couple of differences. Let's look at the technology sector. XLK up 21 cents, 3 million shares, new high today out here, new high, no resistance anywhere around this inside the XLK. Let's go see if it's the same thing over on Stevie's other charts out here. Real key level of support to be watching in this ETF, the number one weighted ETF inside the S&P 500. This does not bode well for bears out there. Number one, there's no top in place here for the XLK. 55.05 is support. You get below 55.05, and okay, you have my attention, and we'll go ahead and take a look at. But you're right now. You're at the high of the day inside the technology sector. What it wants to do simply wants to go higher out there. Now, you might ask the question, well, just how high? And I think that's a good question. I think what we should do is just go to a weekly chart out here. Man, I don't even know where I'd give you. I don't. She's Louise out here. I mean, this thing has just been on a roll. I mean, to try to come up with a good A to B equals CD, a good lightning bolt pattern on this out here. That's not easy to do. Let me put on a monthly chart. Can we even come up with something on the monthly chart? Maybe we can. Well, that looks like that looks like a thing of beauty. The XLK we're referring to, and we're not anywhere. Well, so that's. Whoa, okay, here we go. Now you and I know where the XLK is headed to, right? The XLK is headed for the swing point. It's almost there. The bottom, which is March, by the way, of 2000, the bottom of which is 55.88. 55.88. So far, the intraday high is 55.50. Now, the volume there, for those of you that are volume aficionados, 25 million shares. Okay. XLK, let's just kind of lay it out the way that it is. Let's just see it the way that it is. 25 million shares back at the swing point, all-time swing point high. It's a monthly swing point that we're looking at, but so what? 25 million. We're only at, what is it, May the 10th? Not even through the 10th. It's right in 53 million shares. So the XLK is moving into a swing point with volume. Any close inside 55.88 says what? Says this is headed to 65.44. Now, do you really think the S&P 500 is going to tank with the number one sector moving higher? It's moving higher, folks, and it's doing it with volume. So there's your number one sector out there. We took a look. What did we take? We took a look at the what did we look at? The healthcare sector. Let's go take a look at the healthcare sector, which today so far as we speak right now, nice little hammer candle after moving down and testing the bottom of its TAS daily box out there. Well, not a hammer right now. It's going to go back and forth. But here's what we do know. Now, this is beautiful because with regard to healthcare, the sector itself, it's got two topping patterns out here. The first topping pattern formed back here on the trading day of March the 15th. That's prices moving higher. Gets up to wave number 7. Then it certainly moved lower out here. Then we've got your second topping pattern, which has been 1, 2, 3, 4, which was confirmed. You had a nice little TD sequential that formed TD sequential count on May the 5th. And you actually received a confirmation of a sell signal back on May 8th, 2 days ago. So you've got the number two sector that's saying, I've got a little bit of a sell signal. Now, the beauty here is that if price just simply closes above around the 76.03-ish type area, you'll have one failed bearish pattern. Then it will go ahead and target this March 16th level, 16th or the 15th. I can't tell on this chart which of the days it is. We'll go over here and take a look at it. XLV. So let's switch over. There's the monthly chart, by the way. But let's switch this. We were looking at daily charts out here. And what was the volume back on that trading session? March the 15th, it was 11 million shares. Last time we were up there was 5.7 million shares out here. We'll turn on those profiles. So this way you'll see the boxes. There's your weekly boxes. Here's your daily boxes. Volume today on the pullback. a measly 2.8 million shares out there, so really no big deal. Now, it's not out of the woods. There's no way that you're going to get me to say that the XLV is out of the woods. I'll tell you it's out of the woods if it closes back above 75.60. That's all that it needs to do out here. But the XLV healthcare sector has got two topping patterns. But you want to watch it because there is nothing more bullish than failed bearish patterns inside of the XLV. XLF is the third weighted structure, third weighting ETF inside of the S&P 500. So let's go take a look at it. This is trying to form an A to B equals CD to the upside out here. All it has to do is take out the swing point from about 2 weeks ago. Let's take a look at it. Hasn't closed below Stevie's red line. Today was nothing more than a test and a rejection of support. That is the XLF. So we get back to this break. Let's go take a look at where it may be headed to next. TFNN.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back folks, we were taking a look at the XLF before we went to the break. I just switched over to take a look at the current top 10 holdings inside the XLF. JP Morgan is the number one, about 10% of the weighting structure inside that. You have Berkshire Hathaway and then Wells Fargo. Those make up the top three. And just to show you what percentage that is, let's go ahead and pull that back up here for you. Whoops. So, well, I guess we'll see it the full screen out here. We'll see the whole kit and caboodle. So you can see that JP Morgan 10%, Berkshire Hathaway 10%, and Wells Fargo 9%. So nearly 30%. There's only 65 holdings within inside the XLF, but 30%, three of them represent 30%. The top 10, 54%. That's really all you need to know. In fact, you could say really the top five make up 10, 20, 10, 29, 37, and 5 is going to be 42. So 5 of them, those being JP Morgan, Berkshire, Wells Fargo, Bank of America, Citigroup out there, making up the top 5 inside the XLF. Now, Mike in that beautiful city of Toronto called yesterday, and we were taking a look at Mike is short JP Morgan. And now that I look at this a little bit closer, if you're listening here, what you should prepare for is for he's short JP Morgan. I take that back and look at the XLF. Let me see JP Morgan. Let me switch over here and take a look at it. So in the case of JP Morgan, what I'm looking at here, Mike, we talked about this yesterday, how the bottom of the box, 84.84, is the same as the center of the box. That's really strong support out there. That I know we talked about. But what we can see here is that price is still trading above the daily profile. That's 86.27. And we know that the pullback over the course of the last couple of days is light volume compared to the breakout being April 24th. That had 25 million shares to the upside. Yesterday, pulled back 10 million shares, right? The day before, 8. Day before that, 9.4, 11.5. So all of this retracement into a sign of strength has been with just light volume. 50% or less, and you're trading above market profiles out here. So this suggests to you that you should anticipate that JP Morgan is going to trade up to 89.45. Now, I don't know if it's going to break 89.45. If it does, being short would not be the thing to do out here. Breaking, as we said yesterday, man, you close below 84.84. That's an important message. But at this stage of the game, all that's really happened, and it looks like is happening, is what JP Morgan is doing is forming an A to B equals CD to the upside. Looks like that is what it's doing because it pulled back on light volume into a breakout area, that gap. And this says price probably wants to get up to 90.75, maybe 92.04, maybe 93.67 out there. One step at a time. But you don't see the oomph to the downside inside of JP Morgan. Now, over to the XLF, right? You like to see the sector doing the same thing. Well, if you take a look at the breakout session, the most recent one would be April 24th, 98 million shares to the upside. The first pullback was 64 million shares, then 78. Yesterday was 65 million shares. So, and this has formed a new profile, daily profile. Let me turn off the weekly for you because I think this is important from a sector standpoint. Just something for you to consider out there. We're going to go ahead and turn off the weeklies. That's the green. See how yesterday that there was a brand new daily profile that formed, and notice how this was above the prior one. This is telling us from an XLF perspective that a change in trend has formed out here. Whenever you get in this case here, a new daily box that forms above the prior box, that's the signal for us that a change in trend has taken place. Boy, you get really confirmation, what we'll call supersizing it, super confirmation, when you get a close above 23.96. I can't guarantee a close above 23.96. That was a test yesterday of that area. But then 24.19 being the target. Hey, folks, stay tuned. Your favorite polar bear, and I do mean bear, he's up next. That's David White. Then you got the Tom O'Brien Show from 3 to 5. Have a great Wednesday. We'll see you on terrific Thursday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.